TheoTRADE. This is Don Kaufman. April 17th, 2024. 40 minutes to go to the cash close here on this Wednesday afternoon. S&P's down some 27 handles. Gotta tell you though, it's magnificent tech. It's on the edge of the abyss. That and much more here on this TheoTRADE evening update. All right, let me catch you kind of up to speed on what's going on inside of the markets right now and what is really important, not just for the remainder of this week, but really how this marketplace, which is clearly volatile, could turn into an absolute mess in just the next couple of trading sessions, largely dependent upon some of the trade activity we see into today's close, obviously into the end of this week. Again, let's break it down. So as I was saying just moments ago, the S&Ps, they're down about 26, 27 points. Trade out there feels broken, disconnected. It is fast. I mean, the hallmarks of volatility are everywhere. You got to recognize it doesn't even matter how we close, like damage is being inflicted in this marketplace. But look at some of the short-term volatility. I mean, every little announcement, every little nuance is being traded, and we're not talking small, incremental moves. We're talking Mr. Toad's wild ride is wide open over here. 20, 40 handle moves inside of the S&Ps in very, very short periods of time. That's not just today's tape. Yesterday's tape for the most part, was like, massively unchanged. The S&Ps were down nominally yesterday, like some 13 points. Just look at some of the movement. Again, recognizing that the marketplace has completely shifted gears is mission critical for anybody that trades, whether it's on an intraday basis, okay, any spreads that you're placing out there, even those of you that are, I'm in it for the long haul, got to pay attention. We completely shifted gears, okay, and volatility is now cracked wide open. Now, I am not going as far to say that this marketplace it's absolutely turned bearish. We're not home yet. What we're looking at, though, is some very, very fast, again, kind of sketchy trade. And I'm going to tell you what would be a much more critical break for the market. So let's get into it with why I'm talking about like magnificent tech being kind of the edge of the abyss. First thing I want to point out here has everything to do with the fact that, take a look at the financials for just a moment, okay? They're actually slightly higher on the trading session. Moreover, if you look at the energy sector, for the most part, unchanged, okay? When I start talking about magnificent tech being, okay, on the edge, all the sell side activity that you are seeing kind of persist in the marketplace today is and has been some of the outperformers. Specifically, we look at NVIDIA. And I talk about NVIDIA because this is what got us to where we are in the S&Ps. Without unequivocation, sure, some people are going to point out, well, it wasn't just that, Don, it also had some meta. Good, absolutely, I agree with you, and it's slipping a little bit. It also had stuff like Broadcom. Broadcom's actually off by about 3.2%. You're actually seeing some of the AI trade under duress today. And what's interesting and kind of ironic about it is, again, highly specific. There's not full-blown correlation right now. And if anything, that makes me nervous. More on correlation in just a moment. The edge of the abyss is the recognition that right now, NVIDIA, it hasn't even really started to see some sell-side activity. And you have to recognize there is starting to be some damage inflicted upon the S&Ps. Once again, damage is being inflicted upon the S&Ps, but we haven't really started to see bigger sell side inside of NVIDIA. Of course, people are going to call it its corrective territory. It's 10% off. Look at the chart and tell me, okay? This is a nothing move. And moreover, when you start looking at, the Magnificent Seven, obviously you can point out like Tesla, been pretty much decimated out there. In fact, on a year-to-date basis, you're down almost 37%. Apple, there's no great story inside of Apple. It's down almost 10% on a year-to-date basis. Okay, so the Magnificent Seven is not so magnificent. The abyss, though, is when you start looking at things like Google. And you really need to recognize that Google, what is it, 3 days away from what was all-time high. It hasn't been impeded. Sell-side activity hasn't even started, okay, in a couple of these. But right now, we are most definitively on the edge. And the reason I say that is because you're seeing rotations back to places like, again, financials. The financials, they've been hit really hard. I mean, they were up effectively 12% on a year-to-date basis. They are now up 5%. That has been a precipitous slide with no bid under it. Okay. The point being, though, is we're starting to see rotations, not into sectors, but out. And the rotation out right now starts with, again, NVIDIA still up 75% on a year-to-date basis. So the only comment that you can make about NVIDIA, it is the linchpin in this marketplace. If it keeps seeing some sell-side activity, it's not going to matter. You could buy financials all day long. That's not what is likely to happen. The cause for concern at this point, and why I say that magnificent tech is kind of on the edge of the abyss, what we're likely to see if we're going to go into like fits of rage and the market's going to see some bigger sell side, they're going to start hitting them all. What we are not seeing in the marketplace, look at this. You've got pretty good sell side going on today. All right, on top of selling mildly yesterday. S&Ps were basically down 13. There's bigger selling earlier in the week. I mean, the S&Ps right now are down 100 points, okay, on the week. And we're only, on Wednesday, and we still have 30 minutes to go to the cash close. There's no correlation, though, in it, which basically implies, and this is critical, that the real selling hasn't kicked in. We're selling, but we're still at that point of like, okay, discrimination, if you want. I mean, people are selling, they're like, okay, but let's rotate out of here, right? It's discriminant sell-side activity. You can't have that. It's not a good thing for this marketplace right now. So if you're bullish, hey, look, absolutely unequivocally, you can see some rallies back in here. There's no question about it. But this is not the kind of activity that you want to see. And I'm going to tell you exactly why. Because it's not capitulation. Capitulation warrants that we see heavy, heavy degrees of correlation, like a quintessential all down day. No one is puking out of anything. Okay. They're coming in there and they're softly saying, all right, let's actually get out of a little bit of NVIDIA. All right. Well, meanwhile, we're still rotating, okay, just a little bit back into the financials, with a side order of Google on there. That is not good. There's no fear, there's no loathing in this marketplace. So for those of you looking for a quick turnaround, yeah, you can have that quick bounce. Doesn't matter. They're going to come back in and sell it. Without heavier degrees of capitulation, heavier degrees of correlation, we're not home yet. And that is one of the bigger takeaways from this evening's video. Moving on from there, next thing I want to point out, quite surprisingly, bonds are on the bid. And what's interesting is that bonds are rallying back, but you're still seeing hits to the marketplace. Again, not a great sign because selling and sell side has taken on a life of its own inside of the S&Ps. Next on the docket, take a look at volatility. Volatility right now, it doesn't matter. Look, we haven't punched lower, and there's not greater degrees of correlation. So you shouldn't see the VIX necessarily rocketing to the upside because we're not categorically rocking, if you will, to the downside. Nevertheless, don't expect VIX to do much unless what? SPX? Oh, look where we are right now. Oh, the timing of me actually recording this is uncanny. That line on your screen is 50.23. And the 50.23, it's the lower edge of the SPX expected move. You want to see the VIX starting to rock to the upside? If we break off the lower edge of the expected move. This marketplace will start to get wild. This marketplace will start to see greater degrees of correlation. And this marketplace will see volatility again, rocking to the upside. With that, the volatility futures. This is something that I've started mentioning again in just the last couple of trading sessions, because the vol futures, and that is May versus June, specifically May versus June, we are very, very close right now, okay, to seeing vol futures flip over from what we term a contango, okay, into a backwardation. And the backwardation implies, okay, that the 35-day vol futures, which are the Mays start to exceed, okay, the Junes. How close are we? Within 25 cents. I mean, effectively what I'm saying, you could actually get a big push into today's close and vol futures could probably end up flat on the day. Look, okay, the point is, with this, we're not home yet. The sell side activity might look pretty horrendous. We haven't flipped over though. And as soon as these vol futures flip over, it changes the dynamic of how trading firms hedge. Things can get crazy and crazy in a hurry. I mentioned that last weekend's update. Okay, last but definitely not least, as I was mentioning just moments ago, we look at the SPX and the expected move. And again, where are we on the week? To give you a little bit of an orientation over here of where we are, okay? We're literally, as I speak, on the lower edge of expected move. The expected move specifically here was plus or minus $100.36. And you can't make this up. We are down that 100 points to a T, okay? The important thing to think about at this point is us, again, pushing off the lower edge of the expected move. And in doing so, what it would cause is all the firms, okay, that have gamma risk, which is basically every dealer out there has gamma risk, but everybody that's got gamma risk is going to have to trade in the dynamic of the marketplace, which effectively is down right now. So if we start to actually see some sell side activity, they're really going to push. One thing I cannot stress enough, I don't want to sit here, okay, and preach to people about, oh, this is going to happen and that's going to happen. I'm telling you, okay, what you're seeing on the screen right now, I am not discounting the ability for us to make a nice ripping bounce here, but I am telling you, if we bounce, they're going to come right back in and hit this marketplace again. We are right on the edge, people, of a much more substantiated volatility break. Okay, for some of you, this has been wonderful. It's long overdue. I mean, literally, okay, what are we over here? 5 months of buy side followed by what? You got 4 or 5 days here that have some real volatility, okay? But we're on that edge, and that is what is so critical. Don't get caught up moment to moment in some of the edgy, fast, sketchy moves over here. Look forward, look at volatility futures, watch things like high degrees of correlation. It will serve you well in days to come. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.